Ladies and gentlemen, Greg McCloskey from ForexLive.com. As we head toward the end of Friday and into the new trading week, I thought I'd take a look at the sterling versus US dollar from the perspective of what we did this week and what we have to look forward in next week's trading. So let's get started. Now, today is not over, so let's focus a little bit on what the price action has done over the last few hours of trading. We've seen a sharp move to the downside, and that move to the downside has returned right back to the 100-day hour moving average. That's the blue line in this chart. Currently comes in at 1.21805, and the price is finding some support against that level, as you do. It's been a sharp move to the downside, so and fairly quickly. So traders look for those opportunities where they can lean against and take profit, and that's the 100-hour moving average. So I wouldn't be surprised if we start to see some support buying right through here and see a rotation higher. If we do break below that 100-hour moving average, however, we look toward this swing area ahead of the extreme for the week. This swing area came in between these 1.2159 and 1.2167 area, outlined at that number of different levels through here where the market either found support or found resistance, and then we moved above that level in trading yesterday and stayed above that level on our way to the high. Now, the high price in trading here today is another interesting one where we came up to the 50% of this last leg to the downside. This leg to the downside, it came after a couple weeks of consolidation up through here, and the 50% came in at 1.2267. We also broke above the 200-hour moving average today. You can see how the market initially found resistance against that level, rotated back down toward the 38.2% retracement before basing and moving higher and above that moving average. And what was the importance of that break? Well, if you go back in time, and I'm going to take a little bit of a longer term view here, you can see how long the price has stayed above that 200-hour moving average. In fact, you have to go back to right here. This is September 1 for the last time that the price traded above the 200-hour moving average with traded above the 200-hour moving average. So this break above that level should have led to further upside momentum, but guess what? The 50% retracement held, or did a pretty decent job of holding at the 1.2267 level. And when the price started to rotate back below the 200-hour moving average, buyers turned to sellers, pushing the price to the 100-hour moving average. So as we head into the new trading week, what have we've seen this week? A move to the downside of trading down to 121 area, a rotation back to the upside that went above the 200-hour moving average but failed, stalled against 50% retracement, and now moved down to the 100-hour moving average. So if this 100-hour moving average is now able to hold as we head into next week, the trading bias is going to be more neutral, or in the shorter term at least. We are above the 100-hour moving average. We were below the 200-hour moving average. That is a neutral area, and we'll look for either a break lower or a break higher. A break lower would take the price through here down to our lows. A break higher would need to get above the 50% retracement, and then we can start thinking about going higher in this currency pair with a little bit more seriousness above that 200-hour moving average. Absent that, the sellers still probably are more in control. Why? Because on the daily chart for the sterling versus US dollar, we've seen a pretty sharp move to the downside here since peaking in the month of July. I mean, it's still well above the low prices from 2022, but this low that we saw in trading here this week was the lowest level going back to the month of March through here. So most of the year's gains to the upside here have been erased in trading this week. What is curious, however, and we have to keep in mind, is that if we look at the move up from this low right here to this high right here, the 38.2% retracement target over here could not be reached. So there is something as well for the idea that this was just a correction and what is a move to the upside. If that's the case, what we look for is those levels on the hourly chart to be broken, including the 200-hour moving average and holding the 100-hour moving average now on the dip. So there you have it, a little bit of a failure on the top side here in the sterling versus US dollar. The buyers certainly have something to prove, but we are testing support here. We'll see if that can hold as well. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.